Good morning, everybody. We are going to start our prep here today for Tuesday, January 7th. Were you prepared for this move? We had a 50-point move up and a 50-point move down yesterday that we laid out for you in the morning. We also had a 200-point move on the NASDAQ that we laid out for you that I do know several people that caught that, and that was great to see. Are you overtrading and focusing too narrowly and missing these bigger picture moves? Or are you assuming a move is done and missing the next large move? We laid out the reason the market would see downside and the reason it would bounce into the close. Hope you guys are paying attention and ready to level up your game. Just a quick reminder before we get started, derivatives trading is inherently risky and past performance is not indicative of future returns. Yesterday, we laid out our levels and the reasons the market would go up early in the day. And then as people would buy insurance because they were heavily underinsured for today's JOLTS data, we were very underinsured going into the day. And we know that people, and we've gone over this time and time again, that people wait until the last minute to buy that insurance. And what do we see? That insurance starts coming in at 3 o'clock and 3:30 yesterday. So people started buying all that insurance. And with that, we saw the down move when they started the buying. And then once they were done, the insurance sales side of the market moves the market back up to reclaim and devalue those policies. So reclaiming capital, cutting their own risk, and basically making sure that they are on the right side of the trade. That's all that happened. We had the levels, we laid it out for you. This happens time and time again going into these catalysts. Hope you guys are ready for the next time this shows up. Yesterday, we did just go outside of our rotational zone early in the day and made our move higher. And then we pulled all the way back down to our 60-10 level that we had to start the day. And we came right back down. Our line in the sand had moved down to 6,006 yesterday, which is actually where we came down for our low of the day. That now has changed today, and we'll get into that here shortly. Globex so far has just been rotational, and all our line in the sand is just above us. We just now got up to 60.33 and tested it. Remember that being under that brings the possibility for downside in the market. As long as that holds, we will see more upside. So that is going to be the area that do we hold over and see the upside, or do we stay under and bring in potential for downside and all of those risks? As we go through the week, we also pay attention to the catalysts, and with NFP on Friday, that is going to be the critical level that we see the market makers want to get the market over and then begin to defend. Longer term commercials are short, still based on COT. They did cover half their position a couple weeks ago, and now they're just in the middle of their range, about 70,000 contracts short. And market makers yesterday went into risk compression mode, and they're still pretty much there being in risk neutral mode. They haven't gone into risk absorbing mode yet. Fund managers are only 2/3 invested, which again, the last time we've seen it down to these levels was October of 2023, January, April, and August of 2024. And as we get that information, we've made a nice almost 200-point rally since then. And we will see those fund managers begin to chase performance and likely see those numbers increasing in our models here in the coming days. Our systematic strategies and our passive strategies are small buyers today, not really much happening. And so if we look at what we're going to have here today, we are small buyers in this tiny little box here between this orange and this blue. Other than that, we really don't get selling until the 60-70 or down at 59.70. And so they are not really a factor today. Other than that, we are looking for rotational price action between 59.72 and 60.34 with our pivot at 6,005. Again, the line in the sand is going to be your most important factor to watch, and that is 60.36. Under 59.72, our pivot is 59.33 with a target of 59.11, and over 60.34, our pivot is 60.68 with a target of 60.86. Now, for those of you that like to trade something a little faster, we will dive into the NASDAQ here. We did have our move from 680 yesterday up to our pivot at 21,769. And then we said if we get over that, we'd make our target to 21,886, which is right where the market got to. It got to 896, and that was your high a day. So we did have a couple students go long for the 200 points, and then as well the short back down, and then we had the 100-point bounce into the end of the day. So you had plenty of chances to make money on the NASDAQ yesterday with these plans if you understand who's in the market and why. Cut out all of the narratives and follow the money, because that's the real story. Somebody can tell you one thing, but they're doing another behind closed doors with their capital. This is an old Jesse Livermore and over 100-year-old strategy that happens. If you learn where the money is sitting in the markets, you can really enhance your edge. So market makers on the NASDAQ are in risk absorbing mode and a risk compressing mode, and this does slightly favor upside over downside. Be sure to watch your line in the sand for any changes. If you want to know where that is, we will answer that for our Discord subscribers on the NASDAQ. We also follow this on any other market, the Russell, the Dow, the gold, oil, silver, and all of the Mag 7 equities as well. For today on the NASDAQ, we will be looking for a rotational price action between 21,812 and 21,486 with our pivot at 681. If we get over 812, our pivot is 21,904 with a target of 22,030. And if we get under 486, our pivot is going to be down at 410 with a target of 257. Have a great day, everybody. Stay safe trading out there and be ready for jolts today at 10 o'clock.